America's electric vehicle boom is facing a major problem. Nearly all of the critical minerals needed to power our EVs come from overseas, with China dominating the supply chain. But what if I told you there's a new player looking to change the game right here on US soil? My guest today is on a mission to build the first cobalt processing facility in the United States, and they're doing it in an opportunity zone in Arizona. This new plant could be a catalyst for a revolution in the EV industry, American energy independence, and our defense industrial base. Welcome to the Opportunity Zones podcast. I'm Jimmy Atkinson. Joining me on the show today is Michel-Garcia from EVelution Energy. Gil, great to have you on the show. Welcome. How are you?
Thank you for having us, Jimmy.
Absolutely, Gil. Pleased to be with you today. I know you've been working on this one for many years, and it has a pretty powerful OZ component to it as well. But to start us off, why is North America lagging behind China when it comes to critical minerals processing? Why aren't there more cobalt processing facilities in the United States?
We totally dropped the ball, Jimmy. It's been many, many years that we've been allowing the deindustrialization of the United States. And we're very happy that finally we're addressing this issue. And it's a very important issue. We need to bring not just jobs, but the industrial base that made us powerful and wealthy. And that's going to create a very well-paid middle class. And just to get an idea, our jobs are paying in an opportunity zone in a rural area in Arizona, where the average salary for the family is about $40,000. Our jobs are paying $75,000 a year. So it's a complete game changer. And it's obviously going to allow us to repatriate a very important piece of our domestic industrial base that we allowed China to grab onto. And that it's important not just for the EV transition and the energy independence of the United States, but it's also super important for our defense industrial base, for all of the weapon systems. Most of the weapon systems that we have contain cobalt. Cobalt is the most heat-resistant material existing on Earth. And so it goes into any application that needs to resist high heat. Think about the jet engines, think about the coverings of the supersonic missiles, the covering of the stealth bombers, the basically the targeting systems that even a little bit of heat makes the missile hit in the wrong place. The applications are enormous, not just in the EV transition and EV batteries, but also huge defense application opportunities.
Yeah, for sure. There's two big stories that we're telling here with regards to this plant. One is that green energy revolution, that transition to being able to produce EV batteries based on U.S. sourced supply. You're a large part of that, but then also onshoring our defense industrial base as well. Cobalt, a pretty powerful mineral that needs to get processed. And today, almost all of the cobalt that gets processed occurs in China. And this will be, if I'm not mistaken, this will be the first North American cobalt processing plant. What does a cobalt processing plant do exactly, though? Maybe you can tell me a little bit about how it all works.
The process that we're doing is we're taking cobalt hydroxide, which is relatively processed material already. So if you think about a mine, what comes out of a mine is ore. And then the first processing, you separate that ore into its components. So cobalt exists in the world as a secondary mineral. So it exists either in conjunction with nickel. Think about the deposits in Indonesia that we hear all about, or it exists in conjunction with copper. And in copper, 50% of the world's reserves and 70% of the world's production happens in Congo. In the United States, we don't have any deposits that basically to speak of. We have very, very small deposits, nothing that could satisfy our demand. So this is one of those materials that we have to go abroad to import. Now, what we're doing is we're bypassing China. China doesn't have any cobalt either. They just buy it all from Congo, process it in China, and monopolize the market doing that. What we're doing is we're bypassing China. We're putting the processing facility in the United States, creating a ton of jobs, and ensuring that this material, which is very important for national security for the energy transition, is being controlled, done, stored in the United States.
That's interesting. China doesn't actually have any sort of advantage when it comes to the natural resource being able to be tapped into directly there in China. They're importing it. We're going to have to import it. Might as well be the U.S. importing it and processing it here
Exactly.
in the United States domestically. So tell me about your facility that's being constructed in Arizona. Where is it exactly? and what's its current status?
Well, we're located in an opportunity zone in Yuma County, Arizona, near Tacna, Arizona. This is a very rural area. It's known as the Salad Bowl of America. Effectively, there's a lot of farms. It's an agricultural area. One of the benefits of Yuma County is that it's the sunniest county of the United States. And therefore, solar power makes perfect sense for us because it becomes a very cheap renewable power source. So we're building our own proprietary power facility or solar power facility, and that comes with additional benefits. As basically the Colorado River has been drying up, most of that area gets power from the Colorado River from hydroelectric dams. So the farmers are having to pay more for electricity. We provide a solution, not just for ourselves, but also for the agricultural community, in that we're going to be overproducing electricity and supplying farmers all across that area with cheap solar power.
And if I understand it correctly, also the plant itself is going to run on solar electricity. What kind of advantage has that been for you in light of the Inflation Reduction Act that was passed some years ago by the
There's
Biden administration? Are you getting additional funding from the government because not only are you producing these types of materials, but you're doing so using solar powered power
two
energy?
two huge advantages, Jimmy. So the first is what is called the investment tax credit, the renewable energy investment tax credit under the Inflation Reduction Act. Now, if you look at one of the comparative advantages of China is that they don't care about the environment. So they just produce, they're the biggest polluter from coal. So they generate electricity primarily from coal. So their cost of electricity is very low. What the Inflation Reduction Act does is it takes what is okay price power, which is solar power in the best area in Yuma County, which is about 6.5 cents a kilowatt hour. China is generating power around the same cost. But what the Inflation Reduction Act does is it reduces the cost, the capex, and reimburses us for 30 to 50% of the cost of our renewable energy facility. And that reduces our cost per kilowatt hour to about 3.5 cents to 4.5 cents a kilowatt hour from an electricity perspective, making us more competitive vis-a-vis the Chinese.
Yeah, that's incredible. So now, fast forward a few years, we're no longer in the Biden administration. The Inflation Reduction Act still in effect, but it's a few years behind us now. Now Trump is rolling out all of these tariffs, and we're doing this interview in early April. We've just seen about a week or two of pretty severe market volatility, a lot of market reaction to the tariffs that Trump has implemented across many of our partner nations that we import and export to and from. How are the tariffs affecting you, though?
Well, we're very supportive of the president's tariff policy, particularly with respect to China. What the president's advisors and the president has recognized is that China has been undermining us for a long time, particularly in critical minerals. What they have been doing is, in order to prevent us from developing our own critical mineral industry, they have been overproducing and dumping this product at prices that are below cost. And they're doing this with unlimited credit. And it's a purposeful strategy to prevent us from developing our own critical minerals industry and therefore becoming independent from them, because they're essentially the monopolist, right? And they control the entire industry. So imposing tariffs on the Chinese is the right idea. It prevents them from dumping product. It allows us to have adequate margins that then allow us to go out to the market and sell that to domestic suppliers, domestic consumers. And what the president's tariff policy recognized, which is very smart, is that many of these minerals need to be imported. And so the president's tariffs specifically exempt critical minerals from the application of the tariff. So what we import from Congo is exempt from the application of the reciprocal tariffs, but it prevents the Chinese from bringing in cobalt sulfate and basically the cathodes that are made from that cobalt sulfate into the United States market. So it's really a great tariff policy for the growth of the critical minerals sector in the United States.
Got it. And when it comes to bringing in those materials from Congo, do you have supply chain partnerships, or how is it that you're bringing in the cobalt? I'm just curious to learn a little bit more about how you're sourcing the materials. And is it all coming from the Congo? Is that the only place on Earth where cobalt
It's
gets
the
mined?
only place on earth that you can find large producers that are not Chinese. So, but the Chinese have monopolized even the mines. They own, 50% of the mines in Congo, 80% of the mines in Indonesia. I mean, they've really done a job on us. And so what we've done, we've got a lot of experience operating in Africa. I used to trade cobalt and copper, out of Congo, out of Zambia. I used to sell copper out of Mexico and Peru. So I've got, our team has a lot of experience actually physically buying and selling these commodities. And what we did is we used our contacts to make long-term supply agreements with the three biggest non-Chinese producers of this material in the world, which are Glencore, Trafigura, two of the biggest, metal traders in the world, and ERG, which is a European company that has operations in the Congo.
And let's talk about some of your consumers, the domestic consumers of your processed cobalt. Let's just talk about the EV side right now. And I'll ask you about the aerospace and defense industry in a minute. But when we talk about processed cobalt being used for EV batteries, electric vehicle batteries, or other type of storage batteries, who are some of your consumers going to be? Are you going to become a preferred provider for companies like Tesla, General Motors, Ford? Tell me a little bit about what your plans are there.
So I'll tell you a little bit why cobalt is used in batteries and sort of how it gets used. So we would produce cobalt sulfate. So if you imagine the battery having an anode and a cathode and electrodes going back and forth between one and the other, and there's kind of a lithium film in between the two, the lithium is kind of a skating rink, and the electrodes are just going back and forth. And if they go back and forth faster or harder or with more intensity, they create heat. And what cobalt does is it minimizes the heat production in the EV batteries. So think about the Teslas that used to burn up at the beginning when they were launching them. That's because they didn't have enough cobalt. So you need cobalt in the battery so it doesn't overheat, it doesn't burn up. Same thing with the cell phones and airplanes that we've seen videos, right? That's lack of cobalt in the battery. And so who buys our cobalt? Well, there's an enormous industry that's being built in the United States of EV battery industries. I think that the DOE clocked it at something like $120 billion worth of investment. So we're rebuilding this battery infrastructure that didn't exist before. So think about LG Energy Solutions, their 5 billion plant in Arizona, LG Chem, another 5 billion plant in Tennessee. GM POSCO is building facilities. LG and Stellantis are building basically battery facilities. And all of these battery facilities use the type of batteries that use cobalt, which are called NMC batteries. Those are the batteries that are more useful for the North American market because they're basically bigger batteries that go into bigger vehicles, right? And that's what we like to use. We like to use, Americans like to use cars that have a better range, not little, tiny LFP cars like the Chinese or the Europeans. We like our bigger vehicles. Those bigger vehicles use NMC batteries, and all NMC batteries have cobalt in them.
Got it. And so it's your plan, I assume it's your plan to eventually sell this cobalt sulfate material to those large car manufacturers, the
We pretty
biggest
much
EV manufacturers
have
domestically.
LOIs with the entire industry. Our entire production is already essentially spoken for. We're actually in negotiations to increase the size of our production because essentially we've committed it all to all the big boys out there. We can't tell you yet because we haven't signed final agreements, but we've entered into confidential LOIs with all the big boys, and all of the production is spoken for, and they're asking for more. So essentially, being the only game in town from a cobalt sulfate production, having the tariffs put in place, having the issues arising with China trying to undermine our market, is being helpful to us to be the first provider of this key material to the United States.
It's a great position to be in. Let's talk about the aerospace and defense industries now. On March 20th, President Trump signed an executive order called the Immediate Measures to Increase American Mineral Production. What can you tell me about this order, and what is its impact on the aerospace and defense industries when it comes to onshoring production of critical minerals, and how will it impact your company, EVelution Energy?
That's another great policy coming out of the Trump administration. It's a recognition of the importance of critical minerals to our domestic economy and to our national security. And therefore, what it's telling all of the entities of the U.S. government is essentially that critical minerals are essential and they're important to the national defense and the national security of the United States. And therefore, all of the of federal agencies have to look at their policies, their permitting times, their grant awards, their loan programs, and they have to ensure that they're prioritizing critical minerals projects so we can build our own critical mineral supply chain and basically de-risk away from China as quickly as possible.
And you're going to be supplying some of that cobalt metal to defense contractors all over the country. Can you tell me a little bit about who some of the consumers of that product will be?
So think about all of the aerospace and defense industrial sector: Raytheon, General Dynamics, Pratt and Whitney, Boeing, all the big boys that are the primes that supply the Defense Department and the defense industrial base. All of their weapon systems use cobalt. And right now they're importing it all, everything. So obviously that's a very big risk to our national security and to our defense industrial base. And we can't build it fast enough to supply the American suppliers that want this material domestically made in the United States. And we're also talking to the Defense Logistics Agency, which manages the National Defense Stockpile of critical minerals. And so we're thinking also on our facility in the QOZ zone of building a private warehousing facility that would create a strategic commercial reserve of cobalt metal in the event that there's a supply dislocation in the United States or there's an issue. The DLA would have access to it, the US government would have access to it, and we would be able to continue to supply the defense industrial base.
Something like the strategic petroleum reserves, but for critical minerals. I love it.
We would only do cobalt, but the idea is that they would have these separate facilities in different places in the United States.
Sure, no, it's a brilliant idea. Let's talk about the opportunity zones component, given that this is the opportunity zones podcast. Everything we've talked about today, this facility that is going to be processing cobalt into cobalt sulfate and cobalt metal, it's located in an opportunity zone in Yuma, Arizona. How critical is that opportunity zone component to you and your investors, Gil?
Well, it's a great opportunity to make actually what is going to be a boatload of cash, given our situation right now, in a tax efficient way. So because we are part of the critical industries that are being built out in the United States, unlike real estate, our debt is pretty much guaranteed. We have a $200 million facility offered to us by Exim Bank under the Make More in America program to guarantee the financing of 70 to 80% of our construction costs right off the bat. 18-year debt facility at treasuries plus very minimal margins. So think about 4% interest rate. So that underpins, a huge part of why this, in addition to the market demand, in addition to the profit opportunities available because of the tariffs, as well as because of the tax incentives under the IRA, you also have this really cheap guaranteed financing from the US government to ensure that we get this done. And so if you look at our capital stack, we have sort of 70, 80% government debt coming in, long-term government debt of very low interest rates. We have some mezzanine component, which is at a little bit below market rates because we're using the EB5 program, that's the Immigrant Investor Program, to come to fill the mezzanine debt space. And then we're using the QOZ program to fill in the equity piece, which means that for QOZ investors, when we look at our model based on the tariffs right now, we're delivering, and this is going to freak out your public, we're delivering north of 40% return on investment on an annual basis, tax-free. That's a pretty strong, opportunity, right? For investors that have capital gains, that have taken some money off of the market because, the market is right now up and down and up and down. It's a good time to take some of the gains off the table. It's a great opportunity to reinvest those gains, defer the capital gains tax on those gains, and then make all of the gain tax-free in the future.
Yeah, the tax-free profits after a 10-year hold, very compelling, especially at the return numbers that you are projecting. How important is it that legislation comes into effect at some point to extend or renew the Opportunity Zones program? And actually, maybe just to back up for a second, I'm curious, you talked about your capital stack. A lot of it is government debt, a little bit of mezzanine debt coming in the form of EB5 money. What amount of the capital stack and what's the dollar amount of OZ equity that you're raising for this,
So
and how
out
much
of
do you still
the
have left to raise?
$322 million budget for the facility, most of it is government debt. There's a small 60 million component EB5. So about 57.2 million is QOZ fund equity money. And of that, right now, we're only raising 7 million. We're waiting to finalize the contracts and then we're going to reprice. So if you like this opportunity, right now is the time to come in, because effectively right now you're going to get astronomical returns. And what we're offering to QOZ investors in this series, which is a Series B, is we're offering a 10% preferred return and a return of capital in 2027. So what we're doing is we're taking the money that we would receive from the investment tax credit under the renewable energy tax credit, which we get back 30 to 50% of it when we finish the facility. We're taking that cash and giving it back to investors that come in on the Series B. So they get all their money back in 2027, plus a 10% preferred return, and they continue to be shareholders and receive distributions on a going forward basis. So it's a great deal for investors at this stage.
And you get to participate in this story that we've been telling about onshoring American production of critical minerals that are involved in aerospace defense industry, as well as the green revolution and EV battery supply as well. I started asking you a minute ago, and then I changed direction, but I want to get back to my previous question, which was how important is it that opportunity zones get extended and renewed for the purposes of your development
Well,
project? Opportunity zones, of course, for those who aren't aware, they're scheduled to sunset at the end of 2026.
obviously it's very important. We think it's a great program, as you well know, and you've expounded so well in your podcast. This has generated a ton of jobs, and a ton of jobs in high unemployment rural areas. So I mean, it's one of the best programs that we have available to generate economic growth in the areas that really need it. And also, it provides for a very good tax break for American investors to invest in America. I mean, there can be no better argument to grab our own savings, and instead of it going abroad, incentivize them to stay at home and help us to rebuild the U.S. industrial base and the U.S. real estate.
Gil, it's been a pleasure speaking with you today. A lot to think about for my audience. If anybody in the audience wants to learn more about you or EVelution Energy, where should they go?
They should go to our website, evolutionenergy.com. So it's evolutionenergy.com.
Perfect. And for our listeners and viewers out there today, if you enjoyed today's episode, give us a thumbs up, and we'll have show notes available on our website, opportunityzones.com/podcast, if you want to read more about today's show. Also, please be sure to subscribe to us on YouTube or your favorite podcast listening app to always get the latest episodes. Gil, again, it's been a pleasure. Thanks so much for joining me today.
Thanks so much, Jimmy. Really appreciate it.